Welcome to week 45 of my Trading for a Living challenge, where the goal is to make over $1,000 every single week, trading a $125,000 account on margin. And again, if you are brand new, you can find the full playlist down below in the pinned comment and inside the description, where I go through every single week how much money I've made, from accumulation point of view, and how long it's taken me to get it, as well as going through all the trades, the charts, the strategies, all that kind of good stuff. So make sure you check that playlist out and make sure you subscribe if you don't want to miss a single video. Week 45, a brand new month coming in here. We have got a total, should be able to work this out myself, 8 weeks remaining of this challenge, where I'm currently 20% behind if I did nothing throughout the rest of the 8 weeks. So to make 42 grand in 44 weeks has been absolutely fantastic. I'm really happy with the way this performance is going. And what we're going to do in this video is look at all the trades that I did in week 44 and how much money I made. So if we have a look at the headlines, $505, 51% down. It's not been this low for a while. And that's mainly down to me rolling all my trades, bar 2 trades, which I'll explain why later in this video, onto the July cycle. And I'm holding 2 option trades in Meta and in Tesla, which are causing me real problems. And I'm not going to go into why I have these trades still open, but effectively I was doing weekly options and the price of these options went against me very quickly. So I've been trying to manage these positions by taking debits every single monthly cycle. And again, opening all these brand new trades to really offset that debit as most as I can. And you'll see how much debit I'm actually taking on these particular trades. But lesson learned, don't sell weekly options. That's the only thing I can tell you. And if you guys have been following me from the beginning, you guys will know the pain that I went through in this journey. But those 2 trades have really stuck with me. And if I had to do this all over again, I would be in a lot better position. And I've learned a lot for going through this process. So that's the reason why I'm down, and we'll go into the individual trade details to work out how this $505 is made. But overall for the month, I made 4,078 and just missed the goal. And if I did roll 2 additional trades, I would have made the goal. But what I did do is partly down to laziness, and secondly, I want to save these trades for week 45, and we'll go on to that. Took me about half an hour to place all these trades because there's a number of trades to roll, and we are 6% behind, 2.5 grand. And again, just over 25 and a half hours to make 42 grand. Tell me where else you can make that. Obviously, there is a skill element to it, which hopefully, if you ain't subscribed to my channel, I walk through how I do all this stuff. And yeah, this is just really for entertainment purposes and to really give you guys some limelight that you can do this as a trader. So let's get into the meat of it. Let's go look at the trades. As always, I give you guys screenshots of all the trades that I've done. I did quite a few trades. So the way the new IBKR feature is looked at, it looks like it's doing all the sold trades first. And then when I scroll down, it did all the buy trades. So again, put it on the screen now in case you want to pause it, take screenshots, have a look at it. But again, I've made it in these nice little tables, colored tables, so it's easy for you to understand what is going on. As you guys know, I own 300 shares of Tesla at 250. Again, we're very far away from that price. We're at $200 still. I've got what's called an inverted strangle, where normally you've got the put short strike at the bottom and the call short strike at the top, but because the price has gone so far against me, I've had to invert this position to keep generating credit. So if we head over to Tesla, it might be a bit easier to see. So Tesla's trading around $201. And you can see here, this is that weekly call that I talked about earlier that was all the way down here, I think at 100 at some point. And I've managed every cycle now to move it up by $5. So taking a debit every time I make this trade and selling puts, additional calls against it to really hopefully offset that kind of debit. And you can see here, you've had Tesla that has gone up and it's gone down again, and now it's gone back up again. So it's never really been around these levels again since early January. So that's what's caused me the problem here. So I've got the 140 call, I've got a 170 put, and that's what I mean by inverted. The put strike is higher than the call strike. and I've got two short call strikes which are technically both now in the money, or one's in the money, one's near enough at the money. And just so you can see what those trades are. So I rolled up the call from 135 to 140. I rolled the put down from 180 to 170. And all of those from that triangle gave me a minus $720 debit. And you can see it's this trade here, it's $1,500 because I've got 3 contracts. It's basically around 500 because it's pure intrinsic value. It's around $500 debit per contract to roll up by $5 because the extrinsic value is pretty much negligible when you're so deep in the money. And then we've got, obviously we got the puts as well that I sold. Again, reducing cost basis from 180 to 170, brought in $765. I've improved or decreased the risk on my 2 short calls from 190 to 200 and 195 to 205. Again, generated $435 for those rolls. Again, all going from the June monthly to the July monthly. If we take all of Tesla together, again, I managed to reduce that deficit to only a debit of $285. So that's why, imagine if I didn't have, basically, if I take out the call and I highlight all of this, you'll see that I made $1,200 just off the Tesla. It's this debit here of $1,400 that is causing me some real heartache at the moment. So that's Tesla. We've also got Meta. Meta is very similar. Again, I own some stock, which my stock, the current price is way above my strike prices. I got assigned these shares. But we've got a similar inverted strangle over here on Meta. And again, I've been selling some additional puts to really offset that debit. So we rolled the call up from 120 to 125. And just to show you, and again, I show this every week now, is again, Meta has made another new recent high here again today. Where are we now? 271.07. Meta just doesn't go down. Look at this. It's just ridiculous since it peaked out over here in November. We had one earnings gap up, another earnings gap up, but it just keeps going up. And this causes a problem to this call strike. I only need to get the call strike up to 140. So that is what, $15. So 3 additional months. I could move it now, but I don't want to take the massive debit because I'm doing a challenge, right? Yeah, this challenge will be done before I manage to sell out of this actual position. But yeah, that's my problem. Again, I got my call here, my puts over here. Again, I need to roll my put up even further now just to generate more credit to really offset here on what's going on. But if we again have a look at it from a short strangle, again, $1,100 debit, and then a 422 debit on the put side, and then an additional 512. So when we add that all together, it's minus 166. And again, if we didn't have this 1,100 debit, we'll be looking at $934. If I add that to the Tesla, just on Tesla Meta alone, I would have made $1,300 if I didn't have those calls, those deep in the money calls, by selling weekly options. And that is, again, the key takeaway of these 52 weeks or 48, wherever week we're on, week 44, is don't sell weekly covered calls, especially below your cost basis. That was the other thing. I sold it below my cost basis. As a trader, the wheel strategy, it works well, but once you get assigned and you start selling covered calls below your cost basis, it is very hard to manage these positions. So lessons learned, but again, I'm managing these positions as we go along, and the stock hasn't really complied because again, Meta just keeps going up, so it doesn't really help me from that perspective. Coinbase, again, we're looking pretty good on. Coinbase has gone up recently, which is what I needed. It was attacking my short striker, so I rolled this 8 contracts, $45 per the week before in week 43. Kept it at the same strike, and now it's hovering now back in its medium range, which is all good. I had an $80 strike, which I rolled down to 75, and I had an $80 strike, which I brought forward again to the next cycle for $80 flat. So I made a mistake when I rolled this, just because I was doing too many trades. I didn't realize I did this until July the 7th as opposed to July the 21st. Not that much of an issue. I probably could have picked up a few extra dollars in credit. So here are all the trades. We have a look at the total premium. Again, $1,800. Again, I'm including week 43 in here, $1,900. But if we look at just last week, $543. Bang. Google's been on a massive rampage up, and all I've done here is move from the 95 to the 110 strikes and just rolled that down. I didn't really need to keep this on, but I just wanted to generate some more premium. So you can see here we've got a missed daily, a missed weekly, sorry, the June's monthly pivot, and the weekly pivot here missed. So again, June's just started. I'm comfortable with this 110 strike. It has to break through the monthly, and it has to break through the missed weekly. So there'll be some resistance support levels there for sure from there. So I'm quite comfortable with where those currently are trading. Let's get rid of this for a second. IWM is, I didn't do this. And the reason why I didn't do this is because I needed to log on to my Trader Workstation desktop application, because they are classified in IBKR as short strangles, whereas all these others are two single trades. And unfortunately in IBKR, you can't roll a whole strangle on its own. So I just couldn't be bothered to do it, if I'm really honest. So I need to do it this week. Again, I've gone out on my own 21-day rule. But you can see here, it's very nicely stuck within the range of this, and I should pick up nice credits and potentially widen out these strikes slightly. So I should pick up, how much did I pick up on these last time? Picked up 401 there, then I opened a new one, 325. So I'm looking to make about $500-600 buying back the options and all those kind of different things inside there. So that should be all good. And Mara, lovely Mara. Again, I rolled down, I believe. I think I had the 12. Did I make that up? Oh, I had the 16, sorry. So I had the 16, I rolled down to the 13. Again, it needs to make new highs, and it's comfortably inside this range for 8 contracts, and picked up a little cheeky $310 for my efforts. Overall, can't really complain. If we have a quick look at how much I'm using, 42% of the buying power. So I can still place trades. I can easily get over the $1,000. But the trades that I'm looking for this week in week 45, which we're currently on, it's Thursday today, is I'll be looking at rolling up. Have a look at this for a second. Tesla. I'm going to be looking to rolling up this 170 a bit higher to about the 180. That will bring me some premium. I'm looking to push out my 2 IWM trades into the next cycle. Might go a bit more aggressive, tighten up this the green one slightly, bring this call upside up a little bit. Hopefully I can make $600 to $800 on that plus Tesla. That should get me over the 1,000 mark. Look at everything else. I think everything else is trading in and around the range, so I don't want to mess around with it too much, and I'll see what else is new out there to go place some brand new trades. So really hope you've enjoyed this video, and again, make sure you like and subscribe, and I shall see you guys in the next one.